What's up, everybody? Welcome back to my channel, Earn It, Save and Invest It. If you haven't noticed yet, Palantir is the 23rd most valuable company in the world. That seems a little extended for me. It seems a little overvalued. I'm going to break down why I think Palantir is significantly overvalued, as well as why I think it's going to crash in the next 6 to 12 months. Just because I think it's going to crash in the next 6 to 12 months does not mean it can't grow any further from where it's at now. Stock prices don't necessarily correlate with the fundamentals of a business sometimes, but eventually it does. Eventually, right, when you had the GameStop, you had the AMC, and I am not considering Palantir a meme stock. But when you had those other stocks running, it wasn't based on fundamentals. It wasn't based on numbers. It was based on the technicals, the stock, people going crazy, and then it all crashed back to a reality. I feel like Palantir could do the same, not necessarily a meme stock. GameStop, AMC, all these other stocks were not growing and making as much money as Palantir, nothing close. But I am going to break down why I think Palantir is going to crash significantly. So if you like these videos, please give it a like and subscribe. It helps a lot. And I'm just trying to grow my channel, just like Palantir is trying to grow their stock price. I wish I could grow my channel as fast as Palantir is growing. But yeah, let's just break it down really quick on why I think it's going to crash. All right, so here you can see the top 10 companies that are the most valuable in the world, right? We got the top 10: NVIDIA, Microsoft, Apple, Amazon, Google, Meta, Saudi Aramco, Broadcom, TSMC, and Berkshire Hathaway. All of these are American companies, basically, except for TSMC and Saudi Aramco, right? And then if we look at the next 10, if we just look at the value, right? Look at how the market cap, how much these companies are worth. We have NVIDIA at 4.2 trillion, and then the 10th spot, Berkshire Hathaway, is at 1 trillion, right? So in the top 10, we have a 3 trillion difference. That is huge, right? NVIDIA is 4.2, and the 10th is just 1. The gap between the 10th and the number 1 is so significant. The number 10 has to multiply 3x 4x just to reach NVIDIA. That's pretty crazy. Let's go back to from 11 to 20. We have Tesla, JP Morgan Chase, Walmart, Eli Lilly, Visa, Oracle, Tencent, MasterCard, and Netflix, and ExxonMobil. So we have those, right? Again, 11th is at 1 trillion, and the 20th is at 475 billion. So the difference between the 20th to the 11th of the 10, right, the 10 spots, is not nearly as significant as going from the 10th to the 1st, right? If you're the 20th most valuable company and you want to leapfrog to the 10th or somewhere, you only have to double your value, basically, right? So there's a big difference. That top 10, there is a huge difference in value. But let's move on because, of course, like I said, Palantir is in the 20s, right? So we have Costco at 21, Johnson & Johnson at 22, and Palantir at 23. Home Depot, 24, Procter & Gamble, 25, Bank of America, ICBC, SAP, AbbVie, and Novo Nordisk, right? That knocks out the top 30, right? Those are the 20s, basically. As you can see, Palantir is right there in between Johnson & Johnson and Home Depot. Palantir is worth $374 billion right now. I'm going to break down why I do not think it's worth that much. And one way we can look at it, by looking at its neighbors. Let's look at its neighbors. I'm going to compare Palantir to Home Depot, Procter & Gamble, Bank of America, and S&P, and AbbVie, right? The top 5 just below it, right? Palantir has just leapfrogged these stocks, not by much. Palantir is at 374 billion, and AbbVie is 336 billion, right? Again, it's not that big of a difference, but it has been leapfrogging, and it's been keep going up the list. It's going up the list. So what I'm going to do is I'm going to compare Palantir to the 5 companies that are right below it, and then the 5 companies right above it, to see how the numbers do, right? Are the numbers going to be anywhere comparable to these companies, and should it be in this spot? I looked up Palantir against Home Depot, Procter & Gamble, Bank of America, SAP, and AbbVie, right? I did not do ICBC because it's a China company and it's just a different way of how they handle things, so I'm not going to use that. SAP is a German company, but it's still, it handles things very similar to the way we do things. So at Palantir, Home Depot, Procter & Gamble, Bank of America, SAP, and AbbVie. As you can see, their market caps, the enterprise, the employees, obviously Palantir has way less employees than everybody else, right? But as you can see, this, I have a Seeking Alpha, which is like a stock market analysis, and you can look up you link your portfolio, and you do all kind of research and stuff like that. It's a really good website. I really do believe so. They have some really good analysts, and they have 27 analysts covering Palantir. No one else comes close to that, right? That's over double than everybody else. But when you look at the Wall Street analysts, they're only 26, and that's third place. Home Depot has 38 analysts looking at it. AbbVie has 28. So clearly, Palantir, I wouldn't say Seeking Alpha is a retail investment community, but I would have to say it's probably more retail than, I mean, like a Robinhood and, StockTwits, if you know that, and maybe Yahoo, right, and MSNBC. Some of these are probably fairly retail. I'm sure like the pros have these, are spending bigger packages and getting way more research and analytics and stuff maybe from somewhere else. Seeking Alpha does seem more of a retail type of way to get more of the common people the information at a lower price, at an affordable price. And so they have so many more analysts covering Palantir, which is kind of interesting. This is the stock prices in comparison for the last year. Clearly Palantir, way more than everybody else. I mean, over 10x every single one of these stocks, right? And when you think about that, that's the reason why it is where it is. Palantir, the value of the stock isn't based on its numbers. The value of the company and the value of the stock is because of the stock price. It has nothing to do with the actual numbers. People might buy and the stock price might grow significantly because of the numbers growing, but it does not mean that the stock price correlates correctly to the fundamentals. As you can see here, we have, all the ratings. It's pretty similar throughout, right? A lot of people have a hold, some people have a buy, but Palantir is a hold straight out for everybody. Here's their some of their quant factor grades. Again, I'm not going to get too much into this. I just wanted to show you how the valuation is the worst compared to all of these other ones, and the profitability, as you can see, they're all profitable companies, right? The total return, what I want to look at mostly is like the 1 year, 3 year, 5 year return. Palantir doesn't have it, so let's look at the 1 year and the 3 year. Obviously, we saw the 1 year over almost 500%. The 3 year is 1,500%. No one gave you even close to that, right? SAP gave you 225% over those 3 years. Palantir's giving you 1,540%. That is insane, right? Now, if you bought Palantir stock back then, you made some money. I bought some, but I bought some around the 20s, 18 to 20, and then I sold around the 70s. Regretful a little bit. These are dividends. As you can see, Palantir doesn't have any dividends, and the other stocks do. That is an attraction. People do like dividend stocks. At the same time, Palantir is a growth company. They are not going to give out dividends for a while. So that's a little bit of a difference. The valuation, as you can see, the price to earnings, non-GAAP, for 1 year is 272 for Palantir. Everybody else is 25 or under. That's a big, SAP is at 41. So we have Home Depot, Procter & Gamble, Bank of America, SAP, AbbVie, all clocking at basically 25 or under. SAP is at 41. Palantir's at 272 forward earnings. That is just, that's a lot. The revenue growth, again, the growth for Palantir is significantly bigger than these other companies, by far. The revenue growth year over year has been 33% for Palantir, and these other companies at most was 10% for S&P. The other ones, 7%? We have a negative for Procter & Gamble? I mean, yeah, of course these companies aren't going to grow in value, and they can't do anything when you have your revenue not even growing, it's stagnant. But does that mean that Palantir is right? Like, those numbers for Home Depot, Procter and Gamble, we're going to go over some other big numbers about them and how much what they do. And even though their revenue growth is not, it's either stagnant or not growing as well at a 5.5 to 7%, 3, whatever it is, there's other numbers that go into the value of the company and why it is reasonably valued. Even though Palantir is growing at a 33% rate, it doesn't necessarily mean that it is valued well just because it's growing fast. Here's another one: profitability, gross profit margin. Palantir blows them out of the water with 80%. Home Depot only at 33%. They got the worst because they got so much product to deal with, right? Procter & Gamble's at 51. Bank of America's at nothing. This is gross. 73 for SAP and AbbVie at 71. And then we come down to the net income, right? Gross is what you grab totally in a big net, or it's what you grab in total, but the net is what you're actually netting as the company. And they don't beat Bank of America. They're there with Procter & Gamble and S&P, where they're all in the 18%. Home Depot's at around 9% and AbbVie's at 7%. But the point is, it's like their net income margin isn't significantly higher than everybody else. Their gross profit margin is obviously better, but their net income margin is, similar. And Bank of America beats them. Ownership, we're going to go through who owns these shares. Shares outstanding, as you can see, is 2.36 billion, which is, fairly comparable. It's all, But one thing I did realize, one thing that caught my eye was the insider percent. 7.5% of the stocks are owned by insiders. Look at these other companies. You have 0.16 insider ownership at the highest for all these other companies. That is like, wow. These insiders are gonna, if they start selling hard, they're gonna have an impact on the price, because eventually these insiders will. They're gonna realize how stretched the valuation is. They're gonna hear about it all over the news. They're gonna know how it's overvalued, and they're gonna start selling the hell out of their stock. They will. Again, performance, we kind of already went through this, right? The 1-year performance, the 3-year performance just blows them all out of the water. As you can see, from a 1 month all the way to 3 year, there really hasn't been a time period where Palantir has been negative. I mean, it has just been up and up and up and up and up. All these other companies have had, almost similar results in terms of consistent growth, consistent, stock price growth. But in terms of their actual fundamentals growing in the numbers, not the same, obviously. But here's where things are going to change. Let's look at the revenue. Remember, Palantir is worth $370 billion, and they are making $3 billion a year in revenue. Home Depot, 162, Procter & Gamble, 83, Bank of America, 98, S&P, 42, AbbVie, 57. They are all growing. They all make at least 10 times more revenue than Palantir. Let's look at their net income, the profits. $570 million compared to $14 billion, $15 billion, $28 billion, $7 billion, $4 billion. You are now minimum 8 times less profitability, 8 times less profitable in that sense than these other companies. Right? You're looking at your net income and your gross profit, and it is just so significantly lower than these other companies. Your net income available to the common shareholders. I mean, if you look at that number, it is just so significantly lower than all these other companies. That worries me. Your income is literally, your profits are 8 times less, and yet you're worth more than these companies. Like, eventually that's going to come back. The balance sheet. They do have a good balance sheet. They have some of the most cash, right? Actually, I take that back. They're in fourth, right? I saw Bank of America and I thought I saw B. It's $1 trillion. Bank of America has $1.03 trillion in cash. So Palantir is at $5.43 billion in cash. They're only up ahead of Home Depot and a little bit over AbbVie, but other than that, in total of cash, a lot less. Total debt, a lot less. So much less debt though, right? when you look at the debt, 244 million. That's it. So the net debt, they don't have any debt. They have 5 billion in actual surplus of assets, where all these other companies, except for Bank of America, oh, actually no, SAP also is in the positive, right? But these other companies have debt. They have a big debt load compared to Palantir. And Palantir does not have debt. It does not have, it has some debt, but not compared to its assets. It has way more assets in cash than it does debt, which is really good. The cash flow, as you can see, net operating cash flow is 1.3 billion compared to these other companies. Again, it is really significantly lower than these other companies. They obviously spend less in CapEx, but again, it's just, I'm seeing a lot less money. The fundamentals, right? The profits. Like, again, you have the growth factor, and I think people are looking at, oh, the growth factor, it's growing at 80%, 40% here. It's like, that can't consistently grow for years. It can't grow. I don't think it's going to keep going quarter after quarter after quarter after quarter. And eventually, this company might make, 10 billion or something, but that's still not going to be worth their profits are going to be so significantly lower than all these other companies. Eventually, I think it's going to bite them in the butt. But let's actually look at the companies that were right above Palantir, right? These are the next companies that Palantir has to leapfrog. Palantir has already jumped all those companies. These are the next ones in sight, right? So we have Palantir at 23, then we have Johnson & Johnson, Costco, ExxonMobil, Netflix, and MasterCard. These are the next companies that if Palantir starts to keep growing and passing other companies and as the most valuable in the world, these are the next. So as you look at the market cap, right, we're at 374 for Palantir, and it continues to go up all the way up to 515 for MasterCard. Again, employees, significantly lower than everybody else. Netflix, very comparable. I mean, it's still 3.5 times more than Palantir, but nonetheless, it's, and as you can see, Netflix has the most Wall Street analysts, of course. It's one of the biggest, most talked about companies out there. And as you can see, again, Palantir blows all of these companies and all the stock prices and their growth in the stock price out of the water, right? Palantir just blown them all out of the water. We have the quant factor grades, and as you can see, the valuation, all of them are, F, D, this and that. There's so many, this happens a lot where unless the stock has kind of crashed a little bit, the valuation is always saying like a C or D or an F for some reason. But you can see the growth, right? Growth always beats everybody for Palantir. And the profitability, of course, these companies are all profitable, so they're all at an A. Total return, again, Palantir, if we're looking at the 1 year, 3 year, blows everybody out of the water. You have Netflix at 440% in 3 years and still is getting blown out of the water by almost 4x. That's pretty insane. So Palantir, again, is a outperformer in the stock price. Dividends, Netflix does not offer a dividend as well, the same as Palantir. Costco and MasterCard offer very, very low little dividends, so it's not much of an attraction. But again, as you can see, a lot of these companies in the top offer some kind of dividend. Valuation, again, Palantir at the forward non-GAAP PE is at 272, which you look at everybody else, Netflix is usually at the higher end of things, and that's at 44, almost 45. It's 5-6 times less than Palantir. Netflix. And Netflix is usually on the higher end of valuation. It's on the overextended, overstretched. Okay, we'll pay a little bit more for Netflix because we know it's going to grow to come. Palantir, people are I'll pay whatever. That's what it feels like. Again, the growth, right? You look at the growth, revenue growth, 33%. And you look at all the other companies, not nearly as much, 14% for Netflix, which again, why people pay a premium price for it. Palantir, 33% revenue growth, but will it continue? Can it continue? I don't know. We'll find out. My opinion, no. The gross profit margin, 80% compared to everybody else, really good, except for MasterCard at 100. But again, these are the numbers that some people are really looking at and they're focused on. And it's one of those things but do you think that can continue? Yes, it's a good number. That's a good number that they have been reaching and hitting now for a little while, but can that number be reached? Because at some point, when you reach a certain value, you can't keep growing. Like, they should, if they double now, I mean, they would be like in the top 10. No, so they won't be in the top 10. They'll be in the top 20 for sure, maybe top 15. Like, I don't understand how the stock price can keep growing when the numbers are not nearly as comparable to those other companies, right? The net income margin, as you can see, it's kind of in the middle. It's at 18%. We have Johnson & Johnson at 25, and Netflix at 25, MasterCard at 45. ExxonMobil and Costco are obviously on the lower end of profitability because of what the products and stuff and our business model. Again, ownership, the one thing that was really interesting was the insider percentage. Obviously, even Netflix, which is the higher end of like people owning it and being volatile and popular, all this, it's only 0.5% of insiders. So if people at Netflix wanted to just sell it's not going to do anything. But Palantir, if the owner, if the insiders, if the employees and all of them start just flushing the market with shares, it's going to crash the stock a little. It will definitely have a way more impact than these other ones. Again, we already went over the performance basically, but as you can see, some of these have some red dots here and there. ExxonMobil in the 1 year and the 9 month, but they're all fairly doing well over the last 3 years, 5 years, 10 years, right? They're all doing well. The 3-year performance on Palantir is 1,500. It beats everybody's 10-year performance. Palantir's 3-year performance beats everybody's 10-year performance. That's amazing. The income statement, again, their revenue is at $3.12 billion. Look at everybody else. You got $90 billion, $268 billion, $341 billion, $41 billion, and $29 billion. Now again, profitability. You can make $100 billion, but if you're only profiting $1 billion, okay, that's $1 billion. If you make $3 billion and you profit $2 billion, well, I mean, that's a better company probably, right? So the fact is that just because these companies are making so much, you have to look at their net income, right? And as you can see, Palantir is at $570 million. These other ones are all well above it. And profit, the net income is a big one, right? Because the net income available to the common shareholders is really what the value of the stock is to the stockholders, right? So the shareholders. So you're looking at $570 million in profit. Then you have all by the minimum 14x. Costco makes 14 times more profits, basically net income. After that, you go 20 times at Netflix. Like, these companies are making so much more profit. If Palantir does not continue their growth rates, they are not going to be able to make nearly as much, this much money and this much profits. Tell me why it should be valued at where it is. It just doesn't make sense if it's not making nearly as much money as them in terms of profits or revenue, right? The total cash, again, $5.43 billion. It's the lowest out of everybody, but the net debt, as you can see, is the best other than Costco. Costco actually has a better debt load. They have more assets and liabilities, in terms of their total cash and their debt. So that's good. Palantir obviously is doing very well. Their balance sheet is amazing. And then got the cash flow statement again. The net operating cash flow, $1.3 billion. When you look at everybody else, it is just not nearly as much from everybody else. Now the CapEx, $16 million compared to everyone else. Obviously, they're not spending nearly as much. But again, you're just you look at these numbers. You look at all these numbers, and you just say, like, if I were to take away the, maybe I'll do that. Maybe I'll do a game. Hey, guess this stock. Its forward PE is this. This is how much its income is, blah, 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 blah. And the company that's right next to it makes this much, this much, this much, and this much. What is the company, right? And you have to guess, like, okay, should it be next to that company? And you would look at it without even knowing the name of it. You'd look at it and be like, that company is right next to, because I work in the sports industry, sports broadcast and everything, and it's like we do that. We'll like put up like a blank player slate where there's, it's not even the shape of the player, but like who is this player compared to this player, right? And we put up like a crappy player versus a good player, and we look at their numbers like, oh, why isn't he considered great? And we look at other things, right? So we'll look at the numbers compared to someone else, and we'll say, hey, are they comparable? And we're going to look at some of them and say, no, obviously growth rate, yes. But if you're growing at a very fast pace at only 3 billion, just because you're growing very, very fast does not mean that someone that's making 10 to 20 to 50x what you're making, that you're in the same ballpark as them. Your profits. Not only do you have to get to their revenue, obviously the growth rates of them are very low, but you have to get to them and then have the same growth rates as them. To just get to that revenue, Palantir's growth rate has to continue for a very, very, very long time. And this is a high growth rate. So anyway, point is, long video about Palantir crashing, but I do believe it's going to crash here soon. And so I just say all investors watch out. The next 6 to 12 months, maybe even the 12 to 18 months, but I definitely think Palantir is going to come crashing down, and I will pick up shares. I am going to pick up some shares when it comes completely crashing. I want to pick them up lower than 70, because then I'll feel like, okay, I sold at 70, shouldn't have, and then I'll pick some back up, made some profits on the other end. I took my profits, put that somewhere else, but then, maybe buy Palantir, like I said, 60s or 70s, maybe hopefully it gets down to there, and then just kind of build a little bit of a holding for that. So anyway, thank you guys for watching. I know it's a long video, but I do think Palantir is a big one. It's going to be a stock that's going to crash. It's going to hurt people. It's made millionaires, and I think it's going to destroy a few. So anyways, thank you for watching. If you do like this stuff, please give a like and subscribe. I really appreciate everyone who even gets close to watching to this point in my videos. So yeah, thank you again, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.